Ratings agency Standard and Poor's has downgraded Ghana's credit ratings from B to B minus. Now, this means that Ghana's ability to pay its debt on time has now been lowered even further. The downgrade of government's creditworthiness was revealed in the agency's latest assessment of the Ghanaian economy. The latest report says Ghana's finances may not improve anytime soon even if it gets support from lenders like the IMF. And according to Standard and Poor's, the downgrade reflects inherent risks in financing Ghana's wide fiscal and current accounts deficits. The agency adds that it sees Ghana's finances as very weak because of the rise in wage bill and that government may have problems implementing proposals by the IMF to help stabilize the economy. Sydney Casely Hayford is the financial analyst. Let's get his thoughts on this downgrade by Fitch. Sydney, you're welcome to the program.
Well, thank you very much.
Sydney, your thoughts on this B minus downgrade?
I think they have been a little generous. We should probably be looking at a C or a C minus at this stage. The fact of the matter is that government can't really get out of this in at least for another 3 years. The IMF program can only do so much and hold our hands into the first quarter of next year. Thereafter, we need to figure out a way of how we can generate the extra revenue. And at this point in time, it's a big challenge because we should have started 5 years ago. So I'm not too sure that we're going to be able to get out of this anytime soon.
Indeed, they feel that we would have difficulty implementing the IMF conditionalities, if you like, that will come with the bailout. What do you see?
Well, yes and no. We will have it difficult, but there are answers to what government needs to do in order to be able to make this work. And the most important thing, just two things that are most important to do. Number one, government has to shed all the extra cost load that it is carrying, particularly in the education and the health sectors. I have said this many, many times over, and we can't see that government is moving to act on it at all. There's a lot of private sector uptake if government only can find the courage politically to resolve that matter and, just shed its load on the amount of payroll that is carrying in the education sector. That's number one. The other thing that it has to do is to try and bring in the extra income that is sitting within the informal sector. These two things could be the answer to the problem if government has a mind to actually get to task and do this. So there are other minor things, but I think these two big issues will immediately improve government's position as far as the fiscal gap is concerned. Thereafter, it can do other things that will enhance the fiscal gap. But for now, I'm just suggesting two things. Shed the load in the education sector, bring in the informal sector revenue.
I see. We are expected to fly out some Eurobonds. With this downgrade, what sort of effect should we expect it to have on the Eurobond we might float?
Well, I don't know when else you're going to float a Eurobond. I haven't heard anything at all in the grapevine. We currently have $1 billion of exposure, which we are going to be paying over the next a decade or so. So that is in the pipeline. And if government actually carries on, it could be a way of bringing in the needed cash so it can actually be able to pay off. However, the domestic and the international interest debt continues to go up and is beginning to create pressure again on the fiscal gap. So it might not be a prudent thing to go and continue borrowing in international sovereign markets, and especially at the kind of interest rates that we are getting the money. It's a bit punitive. So this is why I'm saying that at the end of the day, government is really stuck. It can do certain things, but there's a limit to exactly how much it can put out there in order to be able to turn the situation around very quickly. This is not a short-term solution. It has to be seen as a medium to long-term solution in order to get us out of the crisis. If not, there's no way you can do this in the short term.
Should we expect this to affect interest rates on the borrowing front if government is stubborn enough to still go out there and borrow?
Well, the interest rates in Ghana are extraordinarily high compared to everybody in the sub-region and also, in fact, across the whole world. We need to address the interest rate regime. And that's a whole myriad of problems because we have too many banks chasing too few funds. And therefore, the on-lending to the customer is just a short-term issue, which the banks are offering all the time. Again, we have discussed all of this going forward. But to answer your question directly, yes, if we are not careful, and if the central bank is not able to find the right tools to be able to manage the currency in the system and to manage inflation, we're heading the same way. We are going to start seeing interest rates going up. And unless the Bank of Ghana starts clamping down on commercial banks, the poor customer is the one who's going to suffer. Because at 35%, it starts creeping up from there. I really don't see how we're going to be able to turn an economy around with those kind of interest rates offering in the market.
So this rating would not only cannot only affect or would not only affect interest rates externally, but it could also affect interest rates internally.
Yes, it can, because the minute the international markets start getting jittery, then investors start getting concerned. Then you get the spiral which starts, which is you then can see that the foreign currency in the market will start dwindling. When that happens, the currency will start depreciating. And then when that happens, of course, people get desperate, whatever money they can at whatever rate. And that means that the banks will therefore take advantage of customers and actually, offer higher rates in order just to be able to, gouge the profit within the market. So once it starts, it spirals. The question what we don't really know is the lag time. How long does it take when situations like this start before it starts impacting? And it's statistics and analysis that we haven't been able to put together properly because the information is not readily available in the marketplace.
Thanks so much for your time, Sydney. We'll leave it here for now. Sydney Casey Hayford is a financial analyst.